Good afternoon, Tsupiteros, and welcome to Pillow Talks, a weekly program brought to you by Tsupitero.com. And in this program, we try to give you an update on the markets and talk about some specific stocks that were moving in the week. Before I begin with my video for today, I'd like to thank one of my sponsors, AP Securities. If you'd like to trade with a broker that has excellent research, do trade with AP Securities or APS Online. Okay, as always, I start off with analyzing the markets. So we'll get right to it. I'm showing you the chart of the PSCI index. As you can see here, the market did drop in the beginning of the week. We didn't hold above 5.9 and we retested the 5,700 level. Last Thursday and last Friday, the market tried to hold above the 5,700 levels. And from the way it's behaving, especially last Friday, I do think that we will rally from here. So I'm expecting a move something like this, then maybe start to go back down again. Okay, so unless proven otherwise, I expect the market to rally from here despite how negative and how bearish the market has been in the last couple of days. Obviously, the market is weak. For some reason, foreign funds are still selling every day despite our up move last Friday. But we are oversold and markets just can't go down forever. So we will likely rally from here. So the only thing that you might want to watch out for is if come Tuesday or Wednesday, we're still trading at current levels and we are not rallying back to 5.9 or 6,000, then that would be a bad sign for the bulls. That would mean that we're probably just consolidating before we continue to go down. But unless proven otherwise, I would expect a rally from the index from here. Okay, so before I continue, I'd like to thank my other sponsor, AAA Equities. If you'd like to trade with a broker that automated stops and automated breakout orders, then do trade with AAA Equities. Okay, the next topic that I want to discuss this afternoon is Ayala Land. Ali has been probably the weakest big cap stock in the entire market for the last couple of days. I'm not sure if it's because of the MSCI rebalancing, which actually ended last week already, but there certainly are some giant or massive foreign funds that are exiting the stock, which is why it has become very weak the last few days. The stock dropped actually for like 12 consecutive days in a row, and that's very rare for a stock like Ayala Land. So what I did now is if you look at my Excel sheet here, what I did now is I took notice of all the times when Ayala Land drops quite significantly in the last 5 years. Okay, I looked at all those instances wherein Ayala Land dropped for like 3 consecutive weeks in a row, and in the last 5 years, I saw like 1, 2, 3, 4, 5, 6 instances that happened. Okay, so there was 2 instances in 2016. There were 3 instances in 2018, and there was 1 instance in 2019. And the average drop for Ali during these times were 21 days. Okay, there was one time that Ali dropped for like 56 days. And the average drop, okay, this is the average drop of Ali, is 21% in that period of time. Okay, sorry, 17 or 16.79% is the average. Okay, um, sorry, the average days here is 33 days. Okay, so in this current drop of Ali, we've been dropping for like 3 weeks already. That is why it's stated here that it's 21 days. Okay, so I'm looking at it from a weekly perspective. I'm counting the days in terms of the number of weeks. That's why I have here 21 days. So that includes the weekends, the Saturdays and the Sundays. Okay, so and in this current drop of Ali, we've already dropped 21.6%, which is actually compared to the other drops of the market here in the last 5 years. This is actually one of the biggest drops of Ali in the last 5 years. Of course, I didn't include the big drop of Ali here. Okay, when the pandemic started. Okay, of course that would certainly constitute the biggest drop of Ali. But if I took that out, the average drop would be 16.79%, and currently Ali is currently down by 21.6% for this drop. Okay, so and every time the Ali does that, okay, the stock rallies, of course, the stock rallies, and it rallies by an average of, let's see here, 22 days. So it drops by an average of 33 days, then it rallies by an average of 22 days. And on average, it rallies by 14%, okay, from the very trough or from the very low. Okay, there was one instance wherein Ali rallied as much as 19%, and on the conservative side, in 2018, Ali only rallied by 9%. Okay, so if I were to use the average, okay, rally that Ali would do after a massive drop, I would tend to expect Ali to climb back up to 30.24 or 14% higher than its low of 26.5. Okay. On a conservative side, okay, if I were to put a conservative target on Ali, that would be 28.87 or a 9% rally from 26.50. And on an aggressive side, I would put 31.57 as my target, or a 19.12% rally from its low of 26.50. So I think Ali right now, if you look at it, It's good for a punt. The nice thing about big caps or blue chips is that unlike the second or third liners, which can go down and down and down, and it could happen that they rarely rally. In the big caps, it very seldom happens that they don't rally from a very oversold condition, because there's always some index fund that's going to buy something like Ayala Land, no? If you look at it from a daily perspective, okay, just if you look at it here, you'll notice every time Ayala drops big, it tends to rally quite a bit, all right? It almost rallies like maybe 75% of what it dropped in the days that it dropped, okay? So eh, here you have a small rally here after this big drop, and then you have this rally here after this big 3-day drop in alley there, and then you have this rally here after this seemingly continuous downtrend in alley over here. So it's very likely, if I were to project where alley is going right now, it's very likely that it will do something like this, okay, and maybe drop back down again, something like that, okay. So again, if we look at our spreadsheet, the conservative target would be 28.87. The average target would be 30.24, and then the aggressive target would be 31.57. So that's it. Another topic that I want to discuss this afternoon would be Bloom, because the gaming issues and the casino issues have been quite strong the last couple of weeks, because there has been news that these establishments will begin opening their doors again to the public. So Bloom rallied quite significantly. You have PLC rallied also quite significantly. You have Web also rallied. Last Friday, LR also started to climb higher. So first, let's look at the fundamentals of these issues. Let's go back to my Excel sheet here. Okay, let me make this a bit bigger. Okay, so I compared all the gaming stocks here. This is Bloom with a market cap of 76 billion. PLC has a market cap of 10 billion. Web and LR have market caps of about 3 billion. And these are their net income in the last 3 years. Bloom last year almost made 10 billion pesos. All right. PLC made 2.3 billion, and Web has been losing money, the last couple of years. LR made a little. LR has been making about 400 million a year, but for some reason its income dropped significantly last year. So if we were to use the 3-year average of these stocks, these are their PE ratios. So as you can see, PLC is actually the cheapest, and with Bloom and LR almost the same. Okay, if I annualize their first semester earnings, this would be their earnings. Of course, everybody would almost everybody had their net income drop from the previous years, no? But at least PLC still made 100 million in the first half. Bloom lost 50 million pala. PLC, this is annualized, so I just multiplied their performances by 2. So PLC still made 50 million in the first half, and Bloom lost about 3.3 in the first half. Okay, so if I use these numbers and then come up with an annualized PE ratio, then this would be how it would look like. All right, and these are their price to book. LR being the cheapest, PLC also being quite cheap, and Web being the most expensive one. So in terms of valuation, Web is definitely the most expensive one, with PLC and LR being the cheapest in the gaming sector. Of course, the market is giving Bloom a premium because it's the one that's making like 5 to 10 billion a year. Okay, so it's but natural that the price to book is 2 and the PE is a bit high at almost 10 times PE. All right, so that's how it looks like. Of course, there are other issues that I didn't include here that are like also part of the gaming sector, such as maybe Bell, for example, which is the mother company of PLC. There's also Alliance Global, which owns Resorts World, and there's also Sun. Okay, so I didn't include them anymore because they're not really direct plays in the gaming sector. Well, Sun is, but Sun hasn't even constructed the casino yet, so I didn't include that one as well yet. So among those that are already operating, you have these 4 issues. Okay, so in terms of their technicals, okay, if you look at their technicals, let's look at Bloom first. So Bloom made a big run in the last 4 days, no, and it started to correct back down last Friday, but I think obviously the stock has broken out of its short-term consolidation and is in a short-term uptrend right now. I expect Bloom to move something like this. Okay, there I expect Bloom to behave somewhat like that, and then maybe because the stock is in a consolidation again in the medium term, I expect maybe some up and down movements again after this behavior here. So for most of the gaming stocks such as PLC, I also expect somewhat like that kind of a movement. Okay, so something like this. Okay, and then maybe consolidate again. For Web, it also started to correct back down last Friday, but I think it's gonna behave somewhat like this. Okay, and then maybe consolidate again. Okay. As for LR, it has begun rallying last Friday. Wait, let me just remove these trend lines here. I expect it to probably climb back up towards the maybe near the 150 level. Okay, somewhere around the 140 to 150 levels. Okay, so there you go. I'm a bit bullish on the gaming sector in the short term, but for the medium term, they're behaving just like the entire market, and they might still continue to consolidate within their medium term ranges. So they're bullish in the short term, but I'm neutral in the medium term for all of them. Okay. So that's it, guys. I hope you enjoyed my video this weekend, and do subscribe to our YouTube channel, as well as do visit our website tsupitero.com for my daily newsletter which is posted there. So that's it. Happy weekend, guys.